Hello, everyone. Welcome back to the Prospero.ai stock market live streams. We are seeing the markets opening up red after the long weekend. So the QQQ is down almost 2.5% today. SPY and Dow down almost just as much. IWM approaching 2% down on the day. The VIX is up 12%. So the market is not feeling the holiday spirit after the long weekend. We're going to go over some of the causes that are probably causing us to be down as we opened up today. Net option sentiment in Prospero is still quite low for both of the indexes. SPY is at 9 currently, and QQQ is at 19. As all of our usual viewers are rolling in here, thank you guys who tune in and week out. Please like the stream on Twitter or YouTube, whatever you're watching on. It helps us the channel grow. So let me take you guys through some of the topics we're going to get into today before George gets in here and we finally roll on into them. So starting off, we're going to be covering what we're seeing in the market today. George will give his thoughts on that. The death cross that has occurred in the SPY, the QQQ, and the Dow Jones now. So all three have experienced the 50-day crossing under the 200-day moving averages. So is that important to pay attention to? And is it a sign of further downside to come as we're now approaching the lowest levels that we've seen in the markets after that crazy, 12, 13% pop we got in a single day? It's all being faded away now. We're seeing Trump and Powell tensions continue to be highlighted, and they don't seem to be getting any better. Trump was tweeting about Powell this morning, so that's another thing on the market's mind. I'm going to ask George, should interest rates actually be lowered like Trump is saying, demanding, or is, who will win out in the end? Then we have a comment from China following up on the negotiations that are set to be happening probably currently as we're speaking between the USA and countries around the world. They were saying that if any countries make deals with the US that isolate China's economy, they will not be happy and there will be repercussions from it. So maybe the market is also pricing in now that it's less likely that good deals will be made in the near future after this headline came out. Then earnings season is upon us. So we had Netflix last week, and they were green today, actually, even in the red market. Let's see if Netflix is still green as we're speaking now. So it seems like they were able to meet the earnings bar, even if it was low. Yes, Netflix is still green by 2%. They're just under $1,000 per share as we speak right now. So Netflix was able to exceed the earnings expectations, but we have Tesla reporting tomorrow. And Tesla was down a lot today, more than most other stocks. So maybe people are getting worried about what is going to be said on the earnings. Let's check in on Tesla. Tesla is now down almost 7% on the day, under $225 per share right now. So highlighting Tesla, what are we expecting going into their earnings? We'll talk all about it. Then we have gold continuing its, hello George, welcome to the stream.
Your audio sounds a little weird. Can anyone else hear it like that, or is that just me?
Let me see if I'm connected to the good mic I got. Yeah, it should be connected. We'll see. Anybody, let us know in the comments if it's sounding busted, and I'll see if I can switch anything up. What do you mean
it's
weird?
Just a little raspy, but it's not like delayed or anything.
Okay. Let us know in the chat if you're hearing that also. And I'll see if I could make any switches here. But I'll just continue for now. Highlighting gold again. Mario said same here. Let me see if I can maybe unconnect and reconnect, see if that does anything at all.
Not good. Same. I just
tried
to switch.
Yeah.
Better?
Yeah.
Okay.
Yeah.
Cool. Okay, so we're back in business here. Thank you guys for commenting, Mario and Bob. Covering gold, it surged to a new high, and now it's been ripping for the entire duration of 2025. So covering that again, and then spinning right into Bitcoin, the aka digital gold. It was up also today after MSTR announced that they bought more Bitcoin. I'll give you the totals, and I want to highlight MSTR's market cap now to the amount of gold not gold, Bitcoin that they hold. Then we're going to go into NVIDIA, which was called out on a major financial podcast, the All In podcast over the weekend, for the percentage of their revenue that comes from China and China subsidiary countries, basically. We'll get into all of that and what it means for NVIDIA. And then I want to bring up some names we haven't talked about in a while. Old friends, IonQ. Do you guys remember the quantum rally that happened at the end of 2024? It feels like decades ago at this point, but revisiting some of those names, asking after they've been hit with the market pullback if any of them are looking interesting now that they are at lower prices. And then last but not least, we have an update from Sam Altman on the amount of money that it's costing OpenAI when people are being polite to ChatGPT and thanking it for its responses and whatnot. It's kind of an interesting conversation. But starting today, George, we're seeing the market red after the long weekend, not in the holiday spirit. No announcements on negotiations or any updates in that realm. We are seeing the SPY and QQQ and Prospero net option sentiment back down. SPY is at 9, QQQ at 19 currently. What do you think made the market open up so red today? Anything specifically, or just continues of what we've been talking about recently?
Yeah, I mean, I think we've been on target with this, right? And it's just like we need to see, there was when the tariffs were pulled back, it was said that we got the leverage and 70 countries are negotiating with us. And, I think we're in a spot where, people need to see more than talk, right? I think that, there were a lot of promises, like, especially if you're going to affect the market as well as much as it happened, right? I think if you're going to say, oh, there's deals on the way, but the market is doing better, people didn't see their wallets, get hit as hard, their 401ks. I think, or, if you're talking about Wall Street, their large wallets hit pretty substantially. I think they especially, and that's what we wrote about our letter this week, need to see real deals cross the finish line because, in some of our other stories, we're talking about, there's very real threats of this getting worse on the other side. And that's just to say not one is better than the other, but if there's like very real threats, and then on the other side, talk of deals, and, one of the things that we brought up where they're starting to see tangible impacts. And I think the graph that we shared where year over year, American oil to China is down 90%, and Canadian oil to China is up 700%, right? So that's the stuff that Wall Street has to start modeling in. And then if we don't really see good tangible evidence on the other side that trade deals are being altered in a positive way for us, I think that's going to continue to be a drag on the market, and we need to see real tangible impacts because there's also other things where we're also seeing that currently, even with the Department of Government Efficiency, the government is spending more money in the first 100 days than they did under Biden, under Trump. So I think what we're seeing is we're not necessarily seeing tangible impacts of the new policies, right? And that could be coming later, right? It absolutely could be. But the market doesn't really move on could be's. The market moves on, is. And I think until we start to see things, start to see signs, right? And it doesn't need to be today, right? If there's a promising trade deal that's signed, that you can model out and say, okay, we're going to see the tangible impacts of this 1, 2, 3 years away, like especially if we're making new deals, with the EU, with non-Asian, non-Chinese Asian countries. But we haven't seen it. And in the absence of that, we're going to continue to see a lot of downward pressure on the market. And that's what that's what our letter was about this weekend. And the other thing that really should be mentioned is we're seeing record numbers of levered ETF bets by retail investors. And when you take that with bearish institutions, right, there seems to be a lot more people in the retail space operating on kind of like good feelings, where Wall Street's waiting for models, right? And model improvement. And that should be a warning sign if you're one of the people levering up on this market, because I do think there's a lot of efforts to create good feelings in the market always. And no matter who's in the government, there's a lot of effort by that party to create good feelings in the market, right? So I would say don't get carried away in that. We need to see real results and not just good feelings about what's to come.
Now, all three indices or major indices, the Dow, the SPY, and the QQQ, have had a death cross occur where the 50-day moving average crosses below the 200. Do you pay any attention to that? Do you think it's predictive of things going forward, or is that more showing of like what's already happened in the markets?
People that watch me for a bit know I'm not the biggest fan of technical signals overall, and I repeat the same line in simplicity, which is just that technical signals are linear. They're lines, right? You're drawing a line in the behavior, in the normal behavior of a market. That's all linear formulas, right? And my line is fortunes are made and lost in the nonlinear. And we are in a nonlinear time, definitively. I'd say throw those technical indicators right out the window. Why, right? Because if Trump announces a major trade deal with the EU tomorrow, it doesn't matter that there was a death cross, right? The market's going to go bonkers. And I would even say, given the fact that the last tariff pause was leaked on social media, essentially, right? I don't even think it takes a deal. I think just like one positive cryptic tweet from Trump would send the market in the other direction, right? So now's not the time to pay attention to lines. Look at things like QQQ and SPY and option sentiment. We definitely saw a movement up in those variables as the tweet was coming, before the tweet was coming a little bit. So that's the kind of thing you need to look at, because that's non-linear, because that's looking at institutional options bets, right? And they're not betting on the lines. They're betting on their non-linear models. Don't look at technicals right now. And sometimes the other thing I say about technicals is like, if that works for you, great. But I'm giving a different warning now. Don't look at them. They're not being helpful right now until we stop moving off the news. Technicals aren't going to do you any good.
And anybody who's been following things knows that Powell and Trump do not seem to be like best friends, but it seems like their relationship is at an all-time low. How do you feel about the situation that's unfolding? Because I think from what I'm seeing in the news and whatnot, it seems like people are starting to get really nervous on what would happen to the market if Trump was to try and fire Powell early, as the Fed's supposed to be independent. So do you have any thoughts on that? But then also, Trump wants interest rates lower. Powell is waiting for data and whatnot. Whose side do you tend to lean more on? Do you think interest rates should be cut? And are we waiting too long, or is it still unclear?
I mean, interest rates lowering can be a great stimulator to the economy, right? But like the big thing here, it really goes back to, I'd say, the interesting bifurcation we have with these tariffs, right? Because we hear one thing about tariffs. They're gonna help with China. They're going to be a great revenue producer for the U.S., right? And then we hear on the other side, they're just negotiating leverage, art of the deal, right? But those two things can't both be true. If it's policy and we need the tax revenue and to rebalance trade, then tariffs have to be tariffs and they have to go through, and there needs to be a policy that they're willing to stick with. If it's art of the deal, then we're not going to get that tax revenue, right? And I say all that because it's just like Powell's kind of frozen because he doesn't know, nobody knows what the policy is, right? And if the tariffs are real, they're going to be inflationary, and you do not want to cut rates, right? Then we could get a stagflation situation very, very easily, like that. Because, the tariffs some of the cuts that are being made in terms of job loss and the government, some of the consumer spending worries that are being associated with these tariffs and the inflation, right? That's going to create a potential negative growth situation, and tariffs are going to create price increases. That's stagflation right there. So if Powell cuts rates, right, we might still see negative growth due to all of the factors that I'm saying, and we will definitely see inflation if that's the case. And the problem with that, right, is you can always cut rates later and cut them a lot to stimulate the economy, right? That's always a play. But rate raises take time. And we all saw that with Biden, right? I think, we try to be fair here. I think we were a little late. I think a lot of people say at least a little late to cut rates, right? And it took a long time to get back on top of inflation, right? So that's why we can't cut rates now, because tariffs are most definitely inflationary. Some of the supply issues where China is supplying us so many goods and they're trying to divert them to other places, that could be inflationary because that could cut supply and raise prices. So there's a lot of potential inflationary pressures. So that's why, right? If Trump turned around and said to Powell, right, you know what, these tariffs aren't real, I'm just negotiating, right? I bet we'd see a much more willing Powell to lower rates. But part of it, and this is where, Powell has to do his job, he's not committing to either one, right? Because if he thought tariffs were more sure, he might be like, hey, I'm raising rates. And he's not saying that either. What he's saying is, I need to see what's going to happen, right? I need to see what's actually going to happen, what policies are actually going to be in place. Then I can make a plan. Then I can tell you what I'm going to do. But right now I'm frozen because I, like everybody else around here, doesn't really know what's going to happen.
And do you have any thoughts about if Trump was to try and fire Powell or get him out of the seat? I think there's questions on even if it's legal or not, but it seems to be I don't know if that would be a black swan or how impactful you think that would be, because it would be kind of like the ending of the current, I think, situation that we've had with the Fed and the government and, them being kind of separated. So do you have any thoughts about that?
I think he can't fire Powell, right? There's nothing like Powell has a term, right? I think it runs through 2026. What Trump has done in the past is just made it uncomfortable for people to which they've quit. And he could absolutely do that to Powell, but Powell's like a bulldog too. I mean, he's not as outspoken as Trump is, but Powell is definitely someone, the more you try to force his hand, and you're seeing that, right? We basically saw the most outspoken negative Powell I've ever seen, right? Normally he couches his language, but he was straight up like, I'm concerned. Like, I'm concerned. I need to make sure I'm protecting things, and there seems to be some concerning policies, right? That's really, really out there for Powell. So I think Powell really takes his responsibilities very seriously, and I think due to what you're talking about, I think he's concerned about inflation, and I think he probably sees himself as the last line of defense against potentially rampant inflation. And I don't think he's going to back down. But yeah, it's scary. I mean, I think if Powell left, we would see, someone who would potentially be willing to make a big immediate rate cut. I mean, I think Trump would basically check with that person to make sure they do it before they got the job, right? But then we really see inflationary risks. But, I think that is, I think that's why the Fed was created, right? Because we want, in a world where we see a lot of short-term thinking, especially because, there's so much about the election cycle, even midterms, it never goes too long before you're trying to, create something, a story. The Fed is supposed to have that longer view, and the Fed is supposed to be not about politics, but about the economy. And, where I could see the argument where cutting rates would be helpful right now, I think what Powell's saying makes sense, where it's just like when you heard Trump say why he backed off the tariffs, he said because people got yippy, right? And it's just like, that's fine. I think ultimately is a good choice, but we shouldn't be making financial policy decisions based on the yippiness of people, right? We should be making them based on long-term policy that we believe in, that we've planned around the yippiness, right? If tariffs are the thing that need to happen, you as a government have to be prepared to ignore whatever happens, right? And that's what I think is making Wall Street more nervous than anything, right? It's that if you believe in the policies and they're going to work and you want to say like, hey, for your models, we are doing this policy and we expect it to have XYZ results in 6 months, 1 year, 2 years. But nobody's getting that. So that's why we're ultimately having a lot of uncertainty in the market, because and the difference I think between retail and institutions, because while you can tell retail investors, a lot of them, that we're going to have some short-term pain and long-term gain, and that could comfort some people, Wall Street needs to say like, okay, what is the short-term pain? What are those numbers? And what are we getting for it long-term? And those numbers have not been produced. We have not seen that. I think partially because, in fairness, it's in flux, and if you're negotiating things that are in flux, it's hard to have those numbers, but Wall Street requires those numbers.
So maybe Wall Street was kind of hopeful that with a long weekend, there would be some positive news in the negotiations of countries around the world. But instead of positive news, we didn't only not get anything, we got negative news. Beijing said that they promised to retaliate against any country that worked with the U.S. to isolate the Chinese economy. If it happens, China will not accept it and will resolutely take reciprocal countermeasures. So, I mean, I don't think that's like unexpected, but now that they've come out and said it, maybe it makes these deals harder to come by and the market is less confident that they will ever occur in this 90-day period. Do you think that's part of the reason why we opened up so red today?
Yeah, I mean, to me, when you look around and see how the situation is playing out, right? Barring deals, right? We keep saying that. We need to see the deals. We need to, I'm where Wall Street's at on this, where it's just like, if we see deals, great. But as I'm looking at this now, my biggest issue is not, are tariffs a good idea? Is there a trade issue with China? Tariffs could definitely be a good idea. There is definitely trade issues with China. However, I don't think you get very far. Diplomacy is called that for a reason, right? I think you get a lot further bringing your allies into the fold, pre-negotiating things, than trying to just force people to go a certain way, right? Because people have to understand, every nation has pride and they have to answer to their voters and their people. The UK now just saying, we're going to go against China because we're getting threats. That's not a really good understanding of how they have to deal with their own people. Imagine if the situation was reversed and Trump was being approached and asked, basically been we have a situation, we want a different trade, and any nation in the world was you have to do it this way, right? It wouldn't go very well. His voters don't want to see that. A lot of voters that, even didn't vote for him, don't want to see America just buckling. And it's the same thing for other proud nations, right? They don't want to see Donald Trump come in and say, this is your deal, you're going against China, right? If you're more willing to do that behind the scenes and say, not calling people out on the public stage, right? And saying, we've got an issue with China. They're becoming very powerful. Why don't we make deals that can protect our pricing, right? Because the truth is, the UK does have tariffs against Chinese EVs that they're considering dropping. And we keep talking about this, having minimums instead of tariffs, right? And people do have issues with China, but if you put them on the spot, and now if you make it look like there's only going to be a deal because the US is forcing a deal, then you have two things you're dealing with. You're dealing with the fact that it's very hard to make these international deals, especially if it's going to piss off a very powerful nation in China. And you have to deal with the fact that, some of these places have their own voters to deal with, and they don't want the perception that they're just buckling to what America wants. So I think that's the big reason that we haven't seen deals yet, because I think this whole thing has gone counter to what works in negotiations, right? I think the whole idea was like, oh, we're America and everybody needs us. But like, even if everybody needs you, you still have to approach a deal in the right way. And I think we have the reverse problem now. Now we have a situation where we had to back off tariffs because our own investors got yippy, right? So now everybody's looking at us and saying like, well, maybe you need the deals more than we need the deals now, because you kind of put everyone on notice. You're on a time clock. We're not really on a time clock. Sure, you can put tariffs on us, but right now you're looking at needing these deals and you don't have any signed. So I think that's what's making Wall Street nervous, right? As much as we might have leverage, we're trying to, I think, apply it to too many nations all at once and putting timelines on it that might back others into the corner, but also back us into the corner, right? Just look at that deal with Canada, right? We're talking about annexing Canada. Meanwhile, they're going to China and selling their oil in quantities that they've never been able to, right? Maybe we forced their hand. Maybe they wouldn't make that deal with China under normal circumstances because it might piss us off. But they're not worried about that because we're already pissed off at everyone, right? We're already picking fights with everyone. So you're just like, okay, I gotta make money my own way, and we're kind of forcing other people. And I shared this in the newsletter. The Prime Minister of Canada was basically like, this is a new era. We were fine. Everybody was prosperous in the old era where trade was centered around the U.S. But now they're basically saying they don't want that anymore, and we have to make our own way. So, yeah, the longer these deals don't actually happen, the more other countries are making their own way. And as much as we'd like to present it as like, these other countries are fucked if they don't do anything with us, we've basically created a situation where everybody's fucked unless they make new deals, unless they figure out a way around it. And other places are doing that, and they're doing it away from us. And the more they do it away from us, the harder it is for us to, get back to where we are. We need to make these deals.
And it's because of all of the problems that you just laid out that I'm so curious about this earnings season to see how companies react. And we have the next major one coming tomorrow out of Tesla. And I'm looking at Tesla in Prospero right now, and I see 100 upside, but 58 net option sentiment. So what do those two signals being so different make you feel about Tesla heading into these earnings? How should Prospero users read that?
Well, it's kind of like that. That's why we have these long and short-term signals, right? Where it's just like, I think there's a lot of uncertainty in the short term. But if you're going to be loading up on long-term options, I think people are saying, okay, like, I don't know what's going to happen in the short term. It may go down a lot more. But in the long term, I think it's a good price for where they're going to be at, where they're going to be at with some of the robotics things, where they're going to be at in self-driving, I'll take that long-term bet. But I don't want to take the short-term where there's like mixed results on the short-term, because 58 is very low for Tesla net option sentiment. So I think it's just that simple.
If anybody's new in here, can you kind of talk about like the actual time lengths when you're talking about the difference between long-term and short-term for those two signals?
Yeah, so net option sentiment is something that we always emphasize. You got to look at it on a day-to-day basis, right? Things can change. But I would say if you see a number, it's a very high or a very low number, we generally say we think that's good for about a day. And up to 30 days, right? Especially if it like stays the same number, it stays bullish, right? We think that that's pretty solid. But long-term is like 6 months to about 2 years. That's what we, back tested too. And I want to share our Discord, and maybe you can take a screenshot on this, or when I'm in the Prospero lab, I'll like run through it on the screen. But we posted a pretty long comment on our Discord here about how we view long-term right now, philosophically.
Okay, so if anybody, I'm gonna actually copy that and post it on the Twitter too after we set up the next topic here. But if anybody wants to check that out, good read there. I also wanted to bring up, we're gonna start with gold, then go over to Bitcoin after, but just bringing up gold again because its surge just continues unabated higher. It's now crossed the $3,400 level, just ripping to new all-time highs. I know that gold is supposed to be like the hedge on the system, the uncorrelated asset. So seeing it just day after day go higher and higher, it's making me more and more nervous that there's something that is not, known throughout the markets, investors right now that could be bubbling, and even bigger panic might be on the table. Do you agree with that, or do you think this is just, part of what's happening with the uncertainty that we've already had, and it's not necessarily a forecaster of like something even worse to come?
Yeah, I mean, typically we don't like assets that are running like this and keep hitting new all-time highs. That being said, we've been in it. We were in IAG, and then our RGLD, Royal Gold, looked a little better, and that's what we got into. But when we look at it, we always talk about this, having like a macro rationale as well as things looking in the signals. And we look at it, it makes a lot of sense in the fact that it's an inflation hedge, right? And I think tariffs are, wherever you are in the world, tariffs are a concern right now, and gold is a great inflation hedge, right? And then you also have, in addition to that, it's a good currency hedge. Like, and I think a lot of the people that might bet on currency, they might say that like, well, I don't really know if, the yen is going to be, that's viewed as a very stable currency. I certainly am not sure about the US dollar. It could go down, but if these trade deals get signed and we can kind of put ourselves at the fulcrum of trade again, the dollar is going to rebound. So I think the types of people that invest in currency, right, with these uncertain currency markets, I think gold looks like a safer hedge there than it normally does versus, having more confidence in a currency. So I think that's what we're seeing right now. We're seeing it as like, you look at two large risks in the market, inflation and just currency value risk. And gold looks like a good bet on both of them. So I think that's what we're seeing.
Now, what's even weirder to me is the fact that Bitcoin is up today. There was some news about MSTR. So Bitcoin now up 1.25% on the day. It was announced that MSTR is buying more Bitcoin. They bought 6,556, now holding over 538,000 Bitcoin in total. And the value of that Bitcoin is around 36 billion today, but the market cap of MSTR is around 85 billion. So I'm wondering, where do you think that extra 50 billion of value is coming from in investors' minds? I know they have a software business, but I don't believe it's anywhere near that much. So why do you think it's trading at such a higher multiple than the actual Bitcoin holdings?
I think when you told me the story, I thought it was pretty funny, and I think what we're looking at here is just a question of people not being able to do that math, right? I think when you look at MSTR, I think a lot more people are comfortable investing in equities than just raw cryptocurrency. And even though there's more, crypto ETFs, everything like that, I think MSTR just became the thing that people were more comfortable with if they wanted to own exposure to Bitcoin as a stock. And then I think tangential to that is people like to put options and long-term options on MSTR are always very solid in our upside. And I think there's, gamma hedging that's associated with that. And basically, what that means is when people own long-term options and are basically betting on it to go up, the institutions that issue those options need to own enough of the stock in case they have to pay out those options, right? So I think those are the two factors there. I think the demand just increases the value on that's the most comfort, the most familiarity. I think there's the gamma, and then I also think part of it is the view that Michael Saylor, the people at MSTR have a good beat on what the price is going to be, so you don't necessarily have to worry about trading it as much. You are kind of trusting Michael Saylor to say, okay, it's time to buy more. It might be time to sell some, so you don't have to worry as much about the price of Bitcoin. And I think it's probably all three of those things.
So MSTR stock has held up pretty well even throughout this pullback, relatively for what they are. But like a lot of Bitcoin miners have been decimated and other Bitcoin related stocks. Do you think MSTR will ever venture into more than just buying Bitcoin, and maybe they'll either purchase or acquire a Bitcoin mining company, or maybe become a brokerage type of thing? Do you think they'll ever look to do any of that in the crypto space?
Well, I think when you look at mining, right, I think you kind of are exposing yourself to a lot of risk. You're exposing yourself to the same price risk as you are with MSTR. Then you're also exposing yourself to the competitive risks of mining, and people are coming up with more efficient ways to do that all the time. New ideas, working in different places, international laws and subsidies and things like that are changing, and so there's a lot more risk involved in those mining operations as a result. So I think that's the big thing, and it's kind of the opposite of what we're talking about with MSTR, where you can say, okay, I can buy MSTR and I trust that Michael Saylor is going to appropriately buy or sell, and so I don't have to worry about that, right? Whereas, the flip side on a miner, right, all of a sudden you might have to keep up with, international regulations and subsidies around mining. You have to keep up with, what kind of technology, what kind of new players are in the market. I think all of that adds to the difficulty to diligence and kind of makes it a completely different risk profile.
That's a great point there. Okay, spinning to NVIDIA, which is also down today. And George, actually, before we get into really the NVIDIA topic, day one of your bold claim of Netflix outperforming NVIDIA over the course of the year is going pretty well after they reported last Thursday. They are up 2.8% today. They're actually right at $1,000 per share right now. And NVIDIA is down 5.5%, currently under the $100 share price. So I think what's hitting NVIDIA hard is that on one of the major finance podcasts in the world, the All In podcast, NVIDIA was pretty much directly called out for kind of going around the restrictions that the government has set for exporting chips to China. Currently, 47% of their revenue comes from China, Singapore, and Taiwan, and basically adding in the Singapore and Taiwan into the China portion. They were saying that companies are being set up to kind of just funnel chips into China from those countries. Do you think this is a major risk, especially if going forward, now the spotlight is on them and they won't be able to maybe get around like they have in the past, and that could really hurt their revenue, profits, and etc.?
Yeah, absolutely. And I think we're talking about the same things that when we talk about general Wall Street issues, right? Because we have the fact that they said, okay, we're expecting a $5.5 billion hit, right? Then we also have the fact that it's just like, okay, certain chips are banned, but how do we know it doesn't escalate, right? And more chips are banned, and they heard it more, and it's just like that becomes a tough forecasting problem, right? Where they're already taking a hit in their guidance, and we don't know how big this is going to get. And it's the same thing where it's just like, okay, how do you make your model to accurately price how much NVIDIA is going to lose in business, not just in the current situation, but if it escalates. And that's going to make people grade down the models, right? And then so much of NVIDIA's valuation is, the way retail plays it, right? And I think we're seeing that in Tesla. We're seeing that in NVIDIA. A lot of how it gets priced so high is just like, you might call it like unmitigated bullishness among retail traders, where, you constantly see, and a lot of the people that talk about it and say NVIDIA is the future, blah, blah, blah. There was prior to this a lot more security and a lot more universal bullishness around NVIDIA. And those cracks are beginning to form. Then you start to say like, okay, institutions look at it and they say, okay, maybe we can't count on the multiple of retail believing in the long-term vision of this. Maybe we have to start evaluating the value different.
Now, what I hadn't realized before is that as restrictions were put on in the past, NVIDIA would specifically design chips, basically like they were the exact same chips with one little change that maybe made them slightly slower or less memory or whatever the case may be. But they would essentially design a chip that was basically exactly the same, call it something else, and then also export that to other countries. I don't know if this is just like, the way of business, but like hearing that left me kind of like a bad taste in my mouth, the practices that they were doing. Do you have any thoughts on that? Or is that just happening in business like throughout, the state of Wall Street? Like, is that just a normal occurrence, or is that abnormal to kind of just go around it so blatantly and like that kind of
I wouldn't call it admirable, but I wouldn't really call it shady either, right? It's kind of like, I consider it like very, very similarly to the people that complained about like the Yankees or the Dodgers, now spending more money than everybody else, where it's just like, those are the rules, right? I don't think you can blame anyone in capitalism for trying to like get the most out of whatever rules are put in front of them. But I think that also speaks to the issue and the fears around NVIDIA right now too, where it's just like, okay, I think they're very good at working around the rules, but do they know what the rules are? It takes a long time to develop a new chip. And maybe by the time they get that new chip developed out around whatever rules exist today, at that point, Trump will say like, oh, I still think that's too fast, or we're limiting them in a different fashion. And like, yeah, when Wall Street firms and CEOs of public companies are often facing the same things. And a lot of the times they're working in concert, right? Wall Street is saying, this is what it's tough to model about your company. These are our concerns. And like a good public company CEO is saying, okay, I hear your concerns. I want to work to assuage those concerns, right? But if what the concerns are and will be can't even be defined well, you can't have that process.
So all chip stocks are kind of getting hit now today, with NVIDIA dropping, SMCI down 7%, AMD down 4%. At any point, can any of these stocks work independently? It seems like they're all kind of moving together at this point. Do you think a new leader, maybe Broadcom or ASML or any of the other ones, Intel, anybody can like kind of move independently, or do you think this entire group is just going to move together throughout this process?
I don't know how much, say, ASML. I believe they're like a Netherlands company or Denmark or something like that. I can't speak to how much they'll be affected, but clearly, they reported some concerning guidance, so it touches them. But I think the interconnected nature, right? We've become such a globalized world, and I think the interconnected nation of this, it's not that simple, right? The whole supply chain is going to be affected by these tariffs, right? So, I mean, Broadcom's an American company, right? But I imagine they're buying I think it said semiconductors specifically were omitted, or there's going to be a new thing. But yeah, I think if you're looking at a place like Broadcom, they're definitely buying parts from, I imagine, China, from other countries that now have, at least 10% tariffs, right? So the whole thing is affected. And I think, the more complicated the product is, and semiconductors are complicated, electronics are complicated, and the more different parts are coming from different places, I think the harder it is to forecast or be bullish on a stock.
So
I think that's and just as a closing, I want to double back to gold, right? I think that's part of it. I think people are looking for simple investment theses right now, right? And I think it's very easy to say, because gold is an inflation hedge, because it is a hedge against currency risk, right? I think that's a very easy thesis to put together. And I think people are moving away from any kind of complicated thesis where they can't forecast it well.
So there's a lot of names that we were talking about at the end of 2024, at the height of everything, within the highest growth AI, and then also the little quantum rally that we saw towards the end of the year that we haven't talked about in a while. I wanted to bring up a few, just name a few, and ask you if any of these are interesting after they've all really pulled back between I'd say 50 and 70% from the highs that we saw. TEM, Tempest AI, was the Nancy Pelosi stock that had a nice little rally there that's pulled back now. Big Bear AI, which we covered when it was rallying. SoundHound, obviously. IonQ, RGTI. All of these are just being hit super hard, and there was so much excitement at the end of that last year. Obviously, a very different environment in the stock market. But just for example, pulling up IonQ and Prospero, 78 upside, 86 growth, 52 net options. Amidst the other signals. So how are you feeling about that group, that cluster of stocks now a couple months after they all went on those rallies?
So I think, and it looks like, especially after today, maybe we exited Palantir a little too soon, right? And what we said about Palantir was just it's amazing that it didn't rally more last week, considering the amazing news it got around I think it was a NATO contract for basically a military grade AI that NATO said they were thrilled with, and it was built in 6 months, right? So I think what we said then, I think, is even more true for these other companies, where it's just growth is going to be challenging in a bull market where there's a lot of consumer confidence, a lot of investor confidence, right? Growth stocks do very well. But it kind of goes the opposite direction. And the more growthy and the longer the tail is to see revenues, that's a company like Big Bear AI. That's a company like IonQ, right? The harder it is for people to speculate on those, and the more they go to more sure revenue streams. So I think you got to look for safer growth. And I was actually reading something about Palantir this morning that really makes me want to, maybe I'll get back in. I kind of want to see QQQ and SPY net option sentiment for a little longer. But talking about how well they've done in terms of beating earnings and how they're conservative forecasters, just in their nature. So that made me think like, hey, like I think before May 5th, and I don't like to play earnings. That actually seems like a good one to play because we're finding out about like that NATO contract. And I think in terms of just like the high value AI, that's going to be there for a while. If you're talking about like nations or, large organizations, that don't necessarily have AI expertise, I think a company like Palantir is going to be there. But I think you have to be very cautious on high growth, low profitability stocks right now. And both of the ones you named, you can go in Prospero, just like where those high growth, low profitability. And I would say even more specific than that, I would say for the foreseeable future, avoid low, kind of below 50 profitability stocks and think about shorting ones that are in the lower range. Just because I think until this is sorted out more, growth, especially companies earlier in their growth cycle, are really going to suffer.
Palantir is actually down over 3% now today, and the markets are kind of heading lower as well. Now the QQQ is down over 3%, SPY approaching 3% down. So the redness has continued throughout the stream today. We're getting very close to where we're basically like one more very red day, a day like today, away from revisiting the lows. And the last time we were at those levels, that was kind of like the Trump put, I would say, where like they were like, okay, there's been enough damage, we got to say something, we got to do something. Do you think we'll see that again if we get back to those levels, or now that they've become more used to those levels, is there not going to be another statement or whatever when we approach them again?
It's where we started, right? We need the deals. We've already paused the tariffs, right? Like that's done. We got the lift from that. We're already heading back down. I think that's because we need to see deals, right? We were told that they were paused, and it was because so many nations were coming to the table and we were going to have these deals, right? And I think that's what we're seeing. We're basically seeing the deals not come through. We're getting some news about, like we're saying, other countries moving away from us in trade and towards places like China. And I think until we see that there's benefit, right, that this is all working in some way where we're going to improve our trade situations in other ways, we're actually going to see places go against China to create a better long-term balance with them so we can pressure them more, or a deal with China, right? There's talk of a deal with China, but we need to see deals. We need to not see promises of deals. Until we get deals, I think we're going to kind of see, we might see some green days, but I think we're going to see a kind of steadier march downward.
So we got a 13% pop from the delay of tariffs. If there was actually, like you just said, a deal with China reached, or EU or whatever, what kind of pop in the markets do you think we could see? And I would guess it would be a little bit more sustainable, since it would actually be like a real deal versus just a delay. So what do you think would happen in the markets?
It depends on the deal, right? I think we get like a little pop if like China and us just agree that we essentially like back off from where we were and go back to where it was on the start, right? That's a big difference than if we see ultimately lower tariffs from U.S. goods going into China, or a promise of a more equal trade situation from them in terms of what they're buying. I think all of that, but it can't be some little deal, right? I think we do need to make deals, don't get me wrong, but I think some smaller deal that's not with China, that's not with the EU, that not with like a fairly large trading partner. We might get a little pop, but it's going to go down. I mean, we need to see major deals here, right? Because we're seeing a lot of risk from this already. We're starting to hear a lot about our supply chain getting disrupted. And I think we're going to see in the next few months, a lot of impact of that. So if we're going to have those negative stories come, we really need to see some positive ones too, to get more than just a pop, to get more of like a sustained recovery. We're going to need to see that.
So one more story here to cover before we switch it over to the model portfolio after. Thank you all, actually over 1,500 of you that have tuned in between YouTube and Twitter. Thank you for hanging out with us today. We have this update from Sam Altman about the amount of money that it's costing ChatGPT to respond to people who are being polite and like talking with manners to ChatGPT. So when people say thank you or other polite phrases, it's costing OpenAI tens of millions of dollars to respond to those. And he said it's money well spent. So I'm wondering, George, do you think that's a smart strategy? Do you think humanizing an AI will win out in the end and it's money well spent, or do you think it's a waste for them to like have unique answers, I guess, each time someone says something like that?
I mean, I think it's super dumb to be spending compute on that. I agree, it's nice, like politeness is fine, but like you don't have to have any models generating any results. All it has to do is say, if you see a thank you, just say you're welcome, like a regular person. Like, I don't think someone is more polite if I say thank you and they give me some long answer that consider our whole conversation. Like, or you're welcome will do just fine. And like, let's be honest, these things are more formalities. Like, I don't think a thank you is very meaningful, right? Other than the fact that it's just there. If I do something for someone, all I need is a thank you. If I say thank you or you're welcome is fine, or a no problem. Like, and that could be hard coded. You don't need to be running any models to solve that problem. But I actually do have a funny story. If you guys ever want to potentially get better answers out of an AI system, where I'm generally polite to the AI and just people in general. That's how I am. I just don't really see a point in not having some general politeness and like a good positive vibe, right? It can always get you a lot further than it's going to cost you. But I actually had one experience that taught me something about the AI. And just so you guys all know, AIs, these chatbots, whatever, they're not optimized to be accurate. That's why you see some of them lying. And I have a pretty funny story. Also, one of my friends once was asking me about this, because a lot of people ask me these types of questions. And they were asking me about why an AI lies. And I was just like, well, like, why do you think this thing owes you the truth, right? If you met a stranger on the street, right, and you ask them a question, would you take their word for it? Would you say, oh, this person is definitely not lying to me? No. So why, if you expect that from something with a more limited consciousness, you don't expect the truth from them, why do you expect the truth from like a super intelligence God? Like, you don't know why it's doing things, right? But you definitely know that even humans don't think they owe each other the truth. So why would you think an AI owes you the truth? So I'll tell you that first part. You know, we're just like, it doesn't owe you the truth. It's not programmed to give you the truth. It's actually programmed to do a few things. It's programmed to engage you, and it's programmed to engage you using as little computing power as possible, right? Because that's the cost, right? So it wants to keep you coming back and hopefully upgrade to higher costs, right? With as little compute power as possible, because, you know, we're eating through those costs. It's eating through a bunch of costs on thank yous or on your welcomes, or what could be your welcomes. But my funny story is like, I was trying to get it to organize a slide for me. And initially I was being polite or whatever and saying like, oh, can you please do this, blah, blah, blah. And then it kept on doing the same thing wrong. And I was like very specifically being like, you have the pictures and the text overlapping. I would give it this specific thing. And I was like, I don't want that. And then finally, I was just like, okay, I'm fed up. This is the last time I'm going to ask you. You're wasting my time here. Either fix what I told you above, or like, I'm not going to ask you to do anything for a while. And it did better. And I think that's a funny story about it, which is just like, okay, apparently, like, I think it is like a human in that way, where sometimes getting pissed off will get more attention or more compute than if it perceives you're happy with the situation. So I think if you're coming in at a 10 on anger with ChatGPT every time, you're probably not going to get any improvement. But that's a little hack that I think you can do. I think if it's repeating the same mistakes and you're willing to, you know, get a little pissed off, maybe threaten a little, I would expect better results.
That's so funny. And I wonder if threatening to leave and not return for a while, since like you're saying, that's what they need you to be active in there. Maybe that's what makes it give you the best results possible. I'd be very curious to see like what it would give you just asking nicely and then saying like, if you don't give me good results, I'm gonna go to Anthropic or whatever, like a competitor, and
Yeah.
see if it would like yeah, that'd be super
Yeah, a
interesting.
good threat. I think a good threat goes a long way. I mean, but like I said, I don't know if that works all the time. If you're just like constantly, I think it's just like with a person. If with your significant other, if every time they do something, you're like threatening to leave them, I think it would only take more than a few times before they wouldn't care anymore.
It's gonna respond. So okay, go ahead, do it. Leave.
Yeah, exactly. If you keep coming back, but yeah, I think if you pop one off every once in a while, it might help you get better results.
So the VIX is currently up 16%. The markets are red. This model portfolio update is going to be interesting. So everybody stick with us. George will join back in from the Prospero.ai lab, and we will do our updates. So see you in a moment, George. I will update everybody while George is doing the switch over on the QQQ and SPY net option sentiment reading we're seeing in the Prospero app currently. On this week market. Hopefully you guys all enjoyed the topics that we covered today. If you did, please share a like, share the stream with your friends if they're interested in finance, AI, tech, whatever the case may be, if you enjoyed the streams. Thank you all for being in here. Let's take a look at the QQQ and SPY net option sentiment. All right, let me pull up Prospero. Okay, pulling up the SPY. All right, so the SPY net option sentiment has dropped down even lower since we last looked. It is currently at 4 in the Prospero app, and it's still remaining above the zero flat line that it was at in probably the second half of March for like a 2-week span, but 4 is definitely not a bullish level. And let's check the QQQ. QQQ is currently at 15, so also going back down lower, although remaining slightly above the SPY for now. Let's get the overall market, see how things are faring since we've been live. Let's see. Apple is now down 3%. It tested the 190 level, but is popping off that now a little bit. Amazon down 3.33%. Meta down 3 and almost 4% on the day. So Meta's been hit hard. Meta is now actually making new lows. It's below its lowest levels from early April, so continuing to go lower, now under $500 per share. That streak of 21 consecutive green days in February, or however long it was, seems like a lifetime ago, huh? Microsoft down 2.5%. Tesla still down about 7%. Alphabet down 3%. So all of the Mag 7 stocks getting hit. Let's see, NVIDIA still at around 96 per share, down over 5% on the day. See how Bitcoin is holding up. Is Bitcoin still green with all this red? It'll be interesting to see. Bitcoin is still green. Bitcoin is just under 88,000 right now, up almost 1% on the day. So yes, hanging in the green. So what we do now, we've had over 2,000 of you join us today, so there's probably some new people in here. We're about to do the model portfolio update, so George will make live moves to the portfolio on the stream that is in our newsletters that you have to pay for, but you get to see it for free on the stream if you watch, so that's the benefits there. And he'll take you through the signals. We'll look at momentum scores. We'll see what's added, what's dropped. And yes, we're about to get into that any moment, so stick around and stay tuned for that.
Okay.
SPY and QQQ just keep on heading lower in net option sentiment, George. SPY is down to 4. QQQ is at 15.
Yeah, I saw that before. Oh, I'm not sharing my screen yet, am I?
You know what I noticed? We just looked through the Mag 7 stocks on the day while you were gone. Meta is actually now well below its previous low from early April, about almost 5% lower. So it's getting hit a little bit harder than some other Mag 7 stocks. I wonder if there's anything specifically going on with them, any new threats.
Yeah, I mean, I think it was just running so much, and then it's a growth stock at the end of the day.
Mm-hmm. Wow, you know what's crazy? If you look at like the Mag 7 on a yearly basis, they're all basically either slightly red or slightly green. But Tesla is actually still up 60% in the past year. So maybe there's more downside than you would think.
Interesting. Yeah, I would not have expected. I mean, it had a nice run when Trump got elected, you know. All right, let's see what's going on here. What did you say here? 4 and what?
Yeah, and 15.
Why is this not? Where? Let's try this again. I see what happened. A weird small thing. I got 32. Oh, damn, Netflix is flipped. All right. So we have 32 here. 42, that's good. Is a firm a win? No, we're not going to cut it. That firm's not a win. I'm not cutting it. Okay. Okay. It's the only thing worthwhile. More consumer defensive. Hello? You can set it up. Thanks, Al. All right, that's good. And then I think we also want some consumer cyclical. Okay. Just do this. Just gonna wait a minute. Consider getting out of Google soon. I think by the end of the day, if I don't see any improvement, I'm getting out of Google. Ooh, 61. Wow. Okay. All right. SSMC. All right, I set that. And is this going to be a win? I think we want to get out of it as a win. Great. Okay, we're getting out of that. All right, what else? RHI is in bad shape. That was a quick turnaround. And we'll leave PRDO. You gotta get it up. So we're going to get out of that. And then I think we want to get into a bunch of these retail ones that we just got into on this. W looks good. Yeah, W. We'll get into W and then it's MHK. Mohawk Industries. That looks good. That looks great. Building products. Yeah, we like that. WMHK. And then Dan. want to get into, what is this one long? KR long. Okay, that's everything. Any questions?
No questions, but I think we should shout out the investing letter before we leave, right? What did we reach? Top 10 on Substack, one of their lists?
We got into the top 10, and then I think we're back down to, on the rising finance list, we can get a live look.
Just for anybody who's watching who hasn't subscribed to it yet.
44 in rising finance. Yeah, check us out. And yeah, we're running a 33% off special. This is the last day. So yeah, it pays for itself. It's our live looks, and it's only like, I think, $7 a month right now. We'll share a quick link in case anyone wants to do that.
I can't wait for our stream Wednesday. We'll be back 3 p.m. We're going to be covering Tesla. I'm sure whatever way it moves following its earnings, it's going to be large. So there's sure to be a lot to talk about there.
There's a discount thing. It's the last day. We rarely run a discount on monthly membership. So give it a try. It's the shortest time you'll ever be able to try it at a discount.
Thank you, everybody. It's been a great stream. Thank you, George. We will be back Wednesday, 3 p.m., discussing all of the latest and greatest financial events in the market. So see you all then. Bye, everyone.